Recording in progress.
Good afternoon, everyone. Thank you for taking the time to participate in today's call. We appreciate your continued interest in Avia and welcome you to our full year 2025 earnings call. For your information, we uploaded presentation materials to our website yesterday. Please note that all comparisons are to the same period of 2024 unless otherwise stated. The plan for today is to start with a quick presentation, followed by a 1-hour Q&A session. If you have any questions during the presentation, please use the Q&A chat box, and we will answer them during the Q&A session. For those who cannot join us now, the webcast of this event will be uploaded to our website not later than tomorrow. Thank you again for being here today. Allow me to start by introducing myself. My name is Andreas Timothy Hadikrisno. I'm the head of investor relations at Avia and will be moderating this earnings call today. We are joined today by 3 other presenters, starting with Mr. Ruslan Tanoko, the Vice President Director of our company, followed by Mr. Robert Tanoko, the Operations and Development Director, and finally, Mr. Kurnia Hadi, the Finance Director. With total revenue reaching $494 million, Avian Brands reinforces its financial resilience, supported by a 44% consolidated gross margin, 27.2% EBITDA margin, and 21.5% net profit margin. Empowered by a nationwide distribution network and more than 9,000 employees, we continue to deliver service excellence and distinguish ourselves across the industry. This page summarizes the company's full year 2025 performance compared to the same period last year. Despite operating in a demand environment that remained challenging and soft, the company delivered a solid top-line performance and achieved results at the upper end of its guidance. Based on our internal estimates and available market data, we believe Avian Brands' market share increased by approximately 2% in 2025, reaching around 26%. On the profitability side, Avian Brands maintained disciplined cost management across the business. In particular, the company exercised tight control over promotional and marketing spending while continuing to execute its strategies. As a result, profitability remained stable, as evidenced by resilient margin performance. During 2025, Avian Brands launched 12 new products in the architectural solutions segment. Product innovation remains as a key driver of our growth. Supported by our robust research, development, and innovation or RDI facility, we continue to introduce new products that are designed to penetrate new markets, drive incremental sales, and strengthen our leadership position. Starting in May 2025, Avian Brands also began distributing Dextone products through its wholly owned distribution centers. Following the integration, the company implemented adjustments to stabilize Dextone's pricing structure and channel strategies. With these systems now firmly in place, we expect Dextone's performance to improve starting in 2026, supported by new product launches and deeper market penetration. In Q4, we further expanded the offering by introducing the economical product range under the Dexbond brand. Over the year, we expanded our network by adding 5 wholly owned distribution centers, which is another driving force behind our growth. While we cannot control the demand environment, we remain firmly committed to delivering industry-leading service to our customers. And our distribution network has been a powerful enabler of that commitment. Through this infrastructure, we maintain a 90% fulfillment rate for our one-day delivery service, while at the same time advancing our cost optimization initiatives. This year, we will continue with the network expansion to strengthen our market reach and maximize the number of transacting customers. In the Q4, Avian Brands recorded a consolidated sales of 2.2 trillion rupiah, representing a growth of 6.3%. This brought the full year sales to 8.1 trillion rupiah, making an 8.7% growth. The performance was driven by the company's strong market execution and continued expansion of its customer base. Throughout 2025, Avian Brands recorded transactions from more than 60,000 retail outlets nationwide, an increase of over 1,500 outlets. The increase in the number of transacting retail outlets reflects the company's deeper market penetration, supported by the continued expansion of our distribution centers. I will hand the call over to our Finance Director, Pak Hadi. Please go ahead, Pak.
Yeah. Thank you, Pak Andreas, and good afternoon, everyone. On this slide, we present an overview of our sales distribution across segments. As shown in the chart on the left, the Architectural Solutions segment remains our core segment, contributing 77% of total sales. Within the segment, the wall, wood and metal, and waterproofing categories continue to be the strongest performers, each delivering positive growth during the year. On the customer side, sales to traditional retail outlets represent 92.3% of our total revenue. Meanwhile, our wholly owned distribution center remain the key distribution channel, generating 90.4% of our revenue. In Q4, Avian Brands generated a consolidated gross profit of 1 trillion rupiah, marking a 10.5% growth with a gross margin of 47.1%. For the full year, consolidated gross profit reached 3.5 trillion rupiah with a 44% gross margin. Throughout the year, the company was able to maintain relatively stable gross margin, supported by disciplined cost optimization, particularly lower below-the-line marketing expenses, alongside two price adjustments implemented to mitigate rising production costs and currency pressures. Looking ahead to 2026, the company remains focused on sustaining cost discipline while closely monitoring potential external factors, including volatility in the US dollar IDR exchange rate. Avian Brands has consistently demonstrated its ability to maintain healthy margin, even amidst a challenging business environment. During Q4, the company reported consolidated EBITDA of 715 billion rupiah, representing growth of 18.2%, with an EBITDA margin of 32.5%. The improvement in EBITDA margin was driven by higher gross margin, alongside disciplined cost management and continued optimization effort. Over the full year, consolidated EBITDA was 2.2 trillion rupiah, maintaining a stable EBITDA margin of 27.2%. On the other hand, the company registered a net profit of 556 billion rupiah in Q4, increasing by 10.3%. The net profit margin for the quarter was 25.3%. For the full year, the reported net profit was 1.7 trillion rupiah, with a net profit margin of 21.5%. The Architecture Solutions segment achieved 5% sales growth in Q4, while volume growth was at 5.9%. For the full year, sales for this segment grew by 7.6%, supported by 7.4% volume growth. The wall segment continued its positive growth in Q4, marking 6 consecutive quarters of strong performance. Avian Brands continue to gain market share and strengthen its position in this segment. On this page, you can see that even amid challenging market conditions, Avian Brands continue to grow its number of transacting customers. Throughout 2025, the Architecture Solutions segment recorded transactions from over 55,500 retail outlets, marking an increase of more than 1,700. This performance was primarily driven by more disciplined monitoring of sales execution in the field, complemented by ongoing customer engagement initiatives. One example is the company customer gathering event, which were consistently held throughout the year across multiple regions. This initiative has contributed to deeper customer loyalty and a higher level of engagement among our retail partners. Throughout the year, the trading goods segment consistently achieved double-digit growth, supported by the strong performance in the PVC pipe category. In Q4, the trading goods segment grew by 10.6%. For the full year, this segment achieved a 12.8% growth, reaching 1.8 trillion rupiah. In terms of customer count, the trading goods segment served more than 52,000 transacting customers during the year, indicating an increase of over 2,400 customers. This number represents 86.6% of our total consolidated customers. Supported by our extensive distribution network, this segment continues to be a strategic complement to our business. Turning to the next slide, this section presents gross profit performance by segment. In Q4, the Architecture Solutions segment generated gross profit of 944 billion rupiah, resulting in a gross margin of 56.1%. The increase in gross margin for this segment was primarily supported by lower below-the-line marketing expenses. For the full year, gross profit reached 3.2 trillion rupiah, translating to 51.6% margin. Meanwhile, the trading goods segment recorded a Q4 gross profit of 90 billion rupiah with a margin of 17.6%. Cumulatively, gross profit for the full year amounted to 329 billion rupiah with a gross margin of 18%. The decrease in gross margin in the trading goods segment was mainly due to high comparison base last year when the company received a one-time bonus from the principal. I will now pass to Pak Robert to continue the presentation.
Yeah, thank you, Buddy. So this page provides an overview of Avian Brands' cost structure for the full year 2025 and highlights the company's continued commitment to disciplined cost management. Overall, raw material prices remain relatively stable during the year. At the same time, the company maintained tight control over operating expenses, resulting in a stable overall cost base as a percentage of sales. General and administrative expenses remain well managed, while sales and marketing expenses were slightly lower reflecting a more focused and efficient allocation of resources. Within COGS, continued efforts to improve production efficiency and supply chain management help mitigate cost pressures. In particular, below-the-line marketing expenses declined to around 6% of total sales, reflecting a more targeted approach aimed at maximizing returns from promotional spending. Taken together, these initiatives enabled Avian Brands to preserve cost discipline while continuing to support growth initiatives, reinforcing the company's ability to sustain profitability over the long term. This slide highlights Avian Brands' cash flow generation and working capital management for the full year 2025. Trade working capital increased to approximately 31% of total sales. Capital expenditure for the year totaled 484 billion rupiah, equivalent to around 6% of sales, with routine CapEx accounting for 2.8% of total sales. A key focus of investment continued to be the rollout of TT machines at retail outlets as part of the company's long-term growth strategies. As a result of higher working capital deployment and increased investment activities, free cash flow amounted to around 1 trillion rupiah, representing around 13% of total sales. Turning to the chart on the far right, on-time collection of accounts receivables remains stable at around 90%, underscoring the strength of Avian Brands' long-standing relationship with retail outlets. The company continues to place strong emphasis on receivable management as key pillar of financial resilience and sustainable growth. This page presents updates on our second share buyback program. We launched this initiative following the successful completion of our previous buyback, where the company repurchased the full 1.4 billion shares authorized. As of yesterday, we have reached around 94% of the maximum share authorized, utilizing around 60% of the total budget. As the market leader in Indonesia decorative paint industry, we remain committed to making a positive impact by integrating the sustainability aspect into our operation and product portfolio. This page highlights our 2025 sustainability progress across multiple ESG pillars. Our initiatives, including advancing eco-friendly product solutions, reducing waste and emissions, investing in people and communities, and holding strong governance practices. Transparency, trust, and respect remain the foundation on how we operate, making decisions and engaging our stakeholders. Looking ahead, we remain committed to advancing our ESG journey with focus and intention. Our long-term commitment is to ensure that sustainability becomes not only an obligation, but a competitive advantage that strengthens our leadership in the years ahead. As we begin 2025, we are highly confident that Avian Brands is well-positioned for whatever market conditions may unfold. We expect the soft demand environment to persist at least through the first half of 2026, and most likely beyond that. With that in mind, our 2026 sales guidance represents our expectation under discontinued market conditions. We are not immune for these persistent challenges in the market, which leads us to focus even more intensely on our strategy to outperform the industry. Our team will continue to execute, building on what has proven successful and maintaining the discipline that has driven our success. Displayed on the right is Avian Brands' production facility for water-based products at its third manufacturing site in Cirebon. The plant is scheduled to be commissioned in the second quarter of 2026, and currently installed the capacity of Cirebon factory is around 200,000 metric ton per year, based on two working shifts. To date, capital expenditure allocation for this project has reached around 66% of the total budget of 750 billion rupiah, with the remaining allocation expected to be deployed during the year. That concludes our full year 2025 presentation. Thank you very much for joining today's earnings call. I will now pass to Pak Andreas to moderate the Q&A sessions.
Thank you, Pak Robert. We can now proceed with the Q&A session, which will last for 1 hour. The first question coming from Bernice Chu. Was there any impact of the floods in Sumatra that seems to be more severe this year on the construction of the 80,000 red and white cooperatives? Do you see any positive benefits for Avia? For instance, if we look at the cement volumes in January, it finally turned positive and recorded the strongest growth of 13% year-on-year growth in January in the past 13 years.
Hi, Bernice. Thank you for your question. So obviously the floods in Sumatra impacted because it's quite severe. Multiple roads in and out from many cities have been severed by the flood. However, keep in mind that since we have so many wholly owned DCs, we've been able to minimize the disruption by having enough inventories at our distribution centers. As compared to our competitors, where their inventory levels tend to be lower, especially if they go through the independent distribution center approach. So we've been able to mitigate the problem and continue to actually do very well and gain market shares. In fact, in areas where the disruption is very severe, like many cities in Aceh, for instance, the demand for the month of January and February have been extra strong. And obviously, this is a testament to continued support from our customers and how the win-win solution, mutually beneficial relationships that we have continue to be in our favor. On the construction side of the red and white cooperatives, we believe that there will be some impact for us because keep in mind that our strongest advantage is on the distribution side, and we have the widest network in the whole country for paint products. And obviously, we also have the largest network of building material shops in the country. So we don't supply to any of the government entities directly or to any government-related entities directly. However, because of our products availability, we believe that we will also enjoy the benefits from the the deployment of the 80,000 or so-called planned red-white cooperatives. We just cannot measure it yet at this point in time. Thank you, Bernice.
Next question coming from David Gan. Gentlemen, congratulations on the wonderful results. Just want to find how sustainable is this lower level of BTL marketing expenses, and how should we look at this number going forward?
Adi, you want to take this question?
Yeah, Pak Ruslan. Yeah, thank you, David, for the question. For the BTL, we will continue to focus on cost optimization to help protect our margin. And this is remain one of our key priorities. But besides on the internal cost monitoring, we also monitoring the external factor like geopolitical and all related risks, because that's also will affect our margin. But for the margin itself, our target at least we can maintain at the same level with 2025 across gross margin, EBITDA, and net profit. Thank you.
If I just can add to that a little bit. So if you see that a significant decrease in the BTL marketing expenses as highlighted on this screen, it's also have to do with the fact that certain promotional programs, for instance, like the gold coin promotions, were converted into alternative schemes, such as vouchers, additional discounts, and other cash-based promotions. These forms of promotions are recorded as deduction from sales rather than BTL expenses under COGS. So that hopefully explains to you why there's a significant decrease from 8.2% to 5.9% is because of that. I think we should look at the combined sales and marketing as well as the below the line. I think maybe it would give a more accurate interpretation. But yeah, accounting regulations in Indonesia basically means that if you give promotion discounts, vouchers, and all this, they will be subject to deduction on your revenue. Thank you.
Next question from Handiman. Hi, thanks for the presentation. Avia's strength has historically been its distribution network and strong presence in secondary cities. How sustainable is this mode today, especially as competitors expand aggressively and modern retail penetration increases? Follow-up angle. Are you seeing margin pressure from discounting? How much of recent volume growth is organic demand versus channel restocking?
Okay, thank you for the question, Handiman. So we believe that our defensive modes by continuing to open wholly owned distribution centers is a very important key success factor for the company for many years to come. Keep in mind that even though the threats from modern retail penetrations is really happening in many of the cities, but their progress has been incredibly slow. So take a look at the two largest, which is Mitra 10 and Depo Bangunan. Mitra 10 currently has around 58 outlets, and Depo Bangunan just recently opened their 17th outlet. So if you combine these two, we're still looking at around 70 or so in a country of, almost 300 million population. In contrast, if you are aware, the number of Home Depot and Lowe's in the US, where the population is maybe about 15% more than that of Indonesia, combined Home Depot and Lowe's, if I'm not mistaken, is in excess of 6,000. So, when you're comparing 70 in Indonesia so far and 6,000 in the US, there's still a lot of room. But in Indonesia, we are, an island nation. So opening as many of these modern retail will not be so easy. And because the density of the population in all these cities are all, again, different. And lastly, if you think about it, right, Ace Hardware should be mentioned, but Ace Hardware does not sell any paint. So, we've been having a bit of relationship with Ace Hardware for the past few years, but sales from them on the paint side has not been growing as fast as we would like them to. So, that's why I didn't mention Ace into the equation, and I just mentioned the Mitra 10 and Depo Bangunan. Are we seeing any margin pressure from discounting? No, not really. I think we continue to maximize our strength, whether through our distribution network or whether that's through the innovation or of the products that we continue to deploy into the market. And we're using what we have, and also monitoring tightly with every dollar that we spent. And because of that, we don't really feel that there is any pressure from discounting or promotions that we've been having.
Maybe
lastly,
just
go ahead, Adi.
sorry, Pak. Yeah, maybe just to add about discounting. I think regarding with Pak Ruslan explanation before, actually the discount actually coming from the changes in a marketing program, right? So from the BTL moving to the discount. So actually in term of margin, there's no effect on that. Yeah, thank you.
And the last question, Handiman, is how much of recent volume growth is organic demand versus channel restocking? Again, this is something that cannot be measured, so we can only use our sort of like gut feeling to gauge like how much is the channel restocking or whether it's organic demand. What I can share with you is that we just concluded our month of January, and we're still almost finishing our month of February. Both these 2 months, we have been demonstrating very strong sales. So, I think shops probably decided to stock up a little bit in December in anticipation for the Lebaran, which is coming up in mid of March. We just entered the fasting month, which essentially is the highlight or the peak of the repainting season. But at the same time, we're also still in the rainy season, right? So that's a bit tricky, because people don't tend to paint as much during the rain. But I think I can say with a lot of confidence that with everything that we've been deploying internally as well as externally, we believe that the strong demand that we have been exhibiting this year should be able to be continued. And this is obviously a good news for us. March, it remains to be seen, but at this point in time, our sales are very high from these 2 months. Thank you.
Thank you, Pak. Next question from David Gunn again. David has several questions here. Number one, what will inventory levels be like this year? And number two, what is your utilization for 2025 and any colors on utilization for 2026? And number three, how much was the two price increases done in 2025?
Yeah, so this is a very good question, David. With regards to the inventory level, so I'm not sure if you're aware, but I think everyone in Indonesia, especially on the outer islands, for the past few months, have been experiencing container shortages. And the container shortages has persist, and there's no way out of it for the time being. I've discussed with many of our container suppliers and shipping providers and all, and basically they're saying that hopefully things will recover after Lebaran, so maybe at the end of March. But look, when we experience any of these issues, such as container shortages, we're always thinking, right, how can we take advantage of this? So I think, you know, we've been able to navigate this issue very well. And the fact that we have, you know, more than 150 wholly owned DCs is, again, a very strong defensive moat for ours. Because if you think about it, right, many of our competitors, when they go through the independent DC network, you know, the independent DC are not going to do all that much. They're probably going to just wait for container shortages to be resolved on its own. Whereas we take a proactive approach. You know, we decided to raise our inventory levels at all DCs, especially on the outer islands, outer Java. And I think this has been proven to be very useful for us. And therefore, you know, sales from outside Java for us is very strong. And this is something that we want to keep going forward until there is a clear sign that, you know, containers issues will be resolved. We will continue to keep our inventory level at this point. With regards to the utilization, maybe Robert wants to answer this.
I'll take that question. So thank you, David. So for the utilization for 2025, right, for Avian as a company, we are reaching about 74%, with a breakdown about 70% from Serang and 76% in Sidoarjo. But bear in mind that this utilization are the combined of production solvent base and water base. So in terms of the water base, utilization has been reaching above 90%. And this is based on 2 working shifts. So it means that we are mostly already running in the 2 working shifts of time. And more or less, we are also running on the 3 shift working already. So this is where we are also planning to have this third factory in Cirebon to be commissioned by mid of this year. So we hope that this also will be able to offset the utilization from the high in Sidoarjo and Serang.
Yeah, just to add something quickly on that. So as Robert just mentioned, David, so for the past few weeks, some plants that we have been operating 24 hours a day. So I think that shows clearly the strong demand that we have. And the strongest demand actually came from the wall paint, followed by the waterproofing. So we are in a way in a unique position where the, you know, fasting month actually coincided with the rainy season. So, you know, while people want to paint, but at the same time, you know, it's raining, what should I paint? And maybe they just focus more on the inside, or on the interiors rather than the exteriors. So we enjoy the benefits of both worlds, where our waterproofing demand is very strong, and so is our wall paints. Last question from you, David. How much was the 2 price hike that we did in 2025? It's around between 2 to 3% only, David. It's not a lot, because when the second time we did it in July or August, the orders of magnitude was less than 2%, and we didn't decide to do that on all segment. We only decided to implement that on a few segment. So I think if you look at our ASP, which has dropped by about 1%, you know, it's due to the product mix, because the more wall paints that we sell, the lower the ASP will be impacted, because the price per liter for wall paint is lower as compared to the waterproofing or wood and metal. Thank you, David.
Next question coming from Joseph Eugene. Hi, my name is Joseph from DBS Vickers. Thank you for the presentation. I have few questions on my side. Number one, what were the key drivers behind the strong architectural sales volume in full year 2025? Within the wall segment, was growth mainly driven by the low-end or premium segment? Number two, regarding management's targeted 4 to 8% volume growth guidance, which segments is expected to be the primary growth driver in full year 2026? And number three, could management provide more color on the factory utilization rate at the Cirebon and Serang plants during the Sidoarjo factory renovation in full year 2026? Thank you.
I'll take the first two answers. Thank you, Joseph. The key drivers behind the strong architectural sales volume is the wall paint segment. So, we've been exhibiting very strong wall paint demand, but this has been supported on the product innovation side. So if we go to the product innovation side, you can see that we did launch 12 products in 2025, and 3 of which belong in the wall paint category. Because Avian Brands is still the strongest in the mid-tier segment, the bulk of our gains are coming from this segment, not from the premium. A premium paint segment is something that we have been continuing to focus on and will continue to do so. But we've been doing very well on the wall paint market share gain. But at the same time, other segments within the architectural solutions are also growing very nicely. For number 2, the management targeted 4 to 8% volume guidance for next year. The primary growth driver for next year, Joseph, will continue to be the 3 main segments, which is the wall paint, the waterproofing, as well as the wood and metal. So the innovation will not stop. We continue to identify, areas where our products need to exist, whether we need to make any improvements, whether we need to launch something more premium or more economical. That is something that we focus on a daily basis. Every 2 months, a very large team will have, meetings at our Avian Innovation Center, where the sales team will be there, the marketing team will be there, the research and development team will be there. We do this on a, bi-monthly basis. And, from there, we decide which products should be focused on this year, whether certain products needs to be postponed for next year or the following year. So the product innovations will continue to happen as we want to continue to gain more market share. On the third one, I'll pass to Robert.
Yeah, Joseph. So about the factory utilization for Cirebon and Serang plants, as well as the updates on the Sidoarjo. So the following utilization, we are more comfortable with the utilization at maximum at 65 to 70%. But again, for the water base, we have been seeing presence a lot of growth, especially on the wall paints and also waterproofing. So we plan to have the Cirebon plant to help on the utilization and run for the first 2 years at about 100,000 metric ton for the annual capacity that we are planning to run. So with this, we hope that the water-based utilization can reduce to about 65 to 70%. As well as in both Serang and Sidoarjo, we have done a lot of also improvement internally, where we able to increase our production capacity and efficiency as well.
Thank you, Pak Robert. Next question coming from David Gan again. Any colors on the market share gain?
Yeah, thanks for the question again, David. So, when we look at our nearest competitors, presentation, which they posted a few days ago, they basically claimed that they gained market share by about 1%. But keep in mind that last year, their overall paint growth in Indonesia was about 1.4%. So, if logically just looking at that, we definitely have a higher base on the architectural solution side. And if our sales on the paint side grew by more than 7.6%, then obviously, we should be growing our market share by more than 2%. But just to be on the conservative side, we think that the market share gain would be about 2%. So it should be somewhere between 2 to 3%, but definitely not lesser than 2%. I hope that helps, David.
Thank you, Pak Ruslan. Next question coming from Cheryl. Thank you for the presentation. I would like to ask about the upcoming Cirebon plan. With the facility expected to commence operation soon, what is the company's strategic plan for the Serang production facility? Will it continue to operate as a manufacturing plant, or will it be repositioned solely as the distribution or logistics center without production activities?
Yeah, thank you, Cheryl. So in the meantime, our strategic plan for the Serang is we keep it the same as it is as a production facility. So the reason why we also prefer a Cirebon plant, which is located in West Java, it is more to cover the west of Indonesia market, whereas also Serang plant is closer to the Priok port, and it will be more dedicated to cover for Sumatra market. And of course, that the both plants will focus on the west of Indonesia market.
If I can just add to that, Cheryl. So the short answer is that the Serang facility will continue to run. In maybe between 5 to 7, 10 years time, we'll make a decision whether we want to discontinue the Serang plant. But in the meantime, we don't have any plan to discontinue that plant in Serang. Because keep in mind that the Cirebon plant will be finished in the next few months, but that is only to produce the water-based. So the Serang, in the first few years will be focused more on the solvent-based to support the entire, western part of Indonesia's expansion. Thank you.
Next question coming from Robin. Hi, team. The higher inventory level isn't reflected in WC days. Would you share more light on this? In relation to this, can we expect higher freight cost increase this year? Lastly, are there updates on the M&A? Thank you.
Go ahead, Adi.
Thank you, Pak Robin, for your question. I think inventory level at the end of 25 have not increased. However, we continue to closely monitor the situation. And in 26, we believe it is prudent to review inventory index at certain locations that have experienced container-related constraint. And on the second question about freight, so far the freight costs have been relatively stable at around 3.5% of sales. So any potential increase should be gradual rather than significant. Yeah, thank you, Pak Robin.
Last date on the M&A, Robin. No, there hasn't been anything yet that we can share to the public. But we're hoping that something would happen this year. From the market, we have been hearing a lot of news about AkzoNobel's Southeast Asia business that they've been wanting to sell. And if I'm not mistaken, I think sometime in March, the whole process will be started by AkzoNobel. I think AkzoNobel in Netherlands are focused on trying to conclude their merger with Axalta. And therefore, the entire Southeast Asia should be, they wanted to get rid of it as soon as possible. And we obviously will participate in this, project. The focus will be on the Indonesian market, obviously. And that's something that, we'll continue to monitor closely. But other than that, there isn't anything else that we can share with you. Thanks, Robin.
Okay. Is there any other questions?
All good. Maybe I just add a few things. So this past month in February has been quite challenging in the sense that, a lot of customers are complaining that, we don't have enough stock. So obviously it's a good problem to have. But keep in mind that anytime there are any disruptions, whether that's coming from flooding or whether that's coming from container shortages, as a company, Avian Brands is one company that is mostly, receiving the benefits from these issues, right? Because we have inventories everywhere, right? As we open more and more DCs, we plan to open more DCs this year, right? And the whole goal is to, again, be closer to our customers and to have enough inventory levels to maintain supply and demand. So in the case of any disruptions, which is like flooding or container issues, then obviously we are one company that is most protected because the buffers that we have at our DCs is basically allowing us to survive much longer as compared to any of our competitors. So that's why the defensive modes from the opening wholly owned DCs continue to be very important for the company.
And there is another question, but coming from Theodorus Melvin. Hi management, thanks for the presentation. Congrats on the result. Can you update us on the nominal buyback realization and your plans for the buyback shares, especially approaching the 5% threshold? Will the owner be purchasing shares from the company? Thank you. As of yesterday, I think we have reached the number of shares to purchase is around 94%, and the budget from the value is about 60% from the second share buyback program.
Go ahead, Adi. You want to add something?
Yeah, I think currently the total treasury shares is around 4.3%. So yeah, of course we are aware about the threshold. That's why we will carefully evaluate the decision about the buyback. Thank you.
Okay, is there any other questions? If there's no other questions, shall we conclude to finish this call, Pak?
Okay.
Okay. If you have any questions that have not been answered, please do not hesitate to reach out, and I will coordinate with the management and get back to you as soon as possible. Once again, we appreciate your participation in our full year 2025 earnings call today and look forward to seeing you in our next earnings call. Thank you, take care, and bye-bye.
Thank you, everyone.
Thank you, everyone.
Thank you.